Hey everybody, Smart Silver Stacker here. Hope you're doing well. Just a quick silver market update for you because we got a very positive sign from the markets today for the precious metal sector, despite the fact that the gold price and the silver price themselves were selling off and they ended the day in the red. And if you're a stacker like me, you might like to take advantage of dips in the price of the precious metals. Make sure you buy your gold and silver at sdbullion.com. Right now, new customers can get gold or silver at spot by visiting sdbullion.com/new. Now, let's take a look at the silver chart here. So going back to June, you can see this white line I've drawn on the chart here, and you can see that in June and July there was a significant amount of resistance at this level right here around 36.25, and that turned out to be an important level because once the silver price broke out, it ran all the way up to around 39.50, the highest silver price in 14 years since 2011. Then we had this correction, and the silver price bounced off of that line, this correction that ended in July. Now, August thus far has been a very positive month for silver. Every candle you can see here on this daily chart, green thus far in the month of August until today, when we had a bit of a decline. Silver price down about 1.95%. Now it's doing a little better in the overnight here, but we had a similar story in gold. Gold had this red candle here as well, and it's in its own interesting pattern, which we'll talk about in just a moment. The really positive sign that we got today was what happened in the gold and the silver miners, and this shows us that there's a lot of interest in this sector from investors. It is becoming clear that there's something to this metals rally, and so investors are beginning to show interest in the companies that produce these. And what happened today was, even though we had that sell-off in gold and silver, the SILJ ETF, which tracks junior silver miners, actually ended the day up. It's had a very good month so far in August, and Friday had a new high, closed here, and then we actually closed above that today. So we managed to put in a new high for the SILJ ETF, and it was kind of a similar story in the GDX here. You can see the GDX, although it did end the day down 0.64% from its Friday close, it still did very well in the day, and it actually had a bit of a sell-off earlier in the session. This was kind of the theme for the miners. At the open, the miners were down significantly, and then that decline was met with strong buying, and we saw this outperformance of the miners relative to the metal. And that price action in the miners suggests to me that the sell-off that we are seeing in both gold and silver is likely to end in relatively short order, and the bull market is going to resume. Now, timing markets down to the minute or the day, very challenging task. But what I will say is tomorrow morning we've got the release of the July CPI data, and I think that's going to be the critical piece of information to determine whether the metals resume their upward trajectory immediately or if perhaps they fall to a level of support. Now, in the case of silver, let's say that the inflation report is hot tomorrow. Now, it's widely expected to be relatively hot, but let's say it's hotter than expected. That could put some downward pressure on the metals, as this is going to put pressure on the Fed to not be as easy so soon because of the fact that inflation is higher. I mean, it wouldn't be a surprise if we get a hot inflation report. It's likely that tariffs are having some impact now on consumer prices, as well as the ongoing debts, deficits, money printing, debt monetization, etc. The M2 money supply is sitting near record all-time highs, so that's a key driver of inflation is the money supply itself. How much currency do you have chasing how many goods? And that sort of thing does play into the inflation report. Now, on the flip side of that coin, we could see a soft inflation report. Data is all pretty much cooked by the government anyway, but it reflects some underlying reality in the economy, I suppose. And regardless, markets and investors do pay attention to these numbers, and algorithms are driven by them. That's also quite important in terms of how these things affect market reactions. If we get a soft inflation report, silver will likely resume its upward trajectory, and we're going to see $40 plus silver very soon. But if we do get a renewed sell-off, I don't think it's going to go beyond this line. I think 36.20 is very likely the line in the sand. So if you do see a retracement to this line, it's not financial advice, that would probably mark a very keen entry point for some physical silver, especially given the fact that there seem to be a lot of spot deals out there right now and premiums remain fairly low. Now, looking at the chart of gold, It is possible that we could see a bit further correction here. If gold falls, I would say it'll probably retest this $3,300 level or so, the bottom line of this consolidation that it has been within for several months now. But if we get the soft inflation report, who knows? That might be the catalyst it needs to break it out of this. And we know it's hunting for one. We know that the gold market is primed and ready for a catalyst. We had that false report about gold bar tariffs last week, sent gold futures skyrocketing to record all-time highs. So we are just one headline away from a resumed uptrend in the metals. But even if we do get a hot inflation report, and that gives investors an idea that perhaps the Fed won't be so easy so soon, the downside risk here in the metals is pretty minimal. And when it comes to the Fed, we still are looking at an 85.9% chance, according to the CME FedWatch tool, of rate cuts at the Fed's next FOMC meeting in September. Now, this number was a bit higher. When we got the very negative jobs report recently, this number was in the mid-90s. So it looks like expectations of a rate cut have cooled slightly since then. And that is interesting that that's coinciding with this brief correction in the price of the precious metals. Those two things are likely correlated. But given the totality of the data here, I remain very bullish on the metals. I think the charts both look incredible when you zoom them out slightly. Silver and gold both clearly in uptrends that are consolidating and just waiting for the next move higher. And if the Fed does deliver a rate cut in September, that could very well be the catalyst as well for a higher trajectory for the metals. And at the end of the day, higher inflation is guaranteed, I suspect. But when you start seeing pressure on the Fed due to things like poor jobs data and a devolving U.S. economic situation, the Fed always errs on the side of inflating rather than letting the whole system collapse under the weight of all the debt. They're going to ease, they're going to cut rates at some point, and when they do, the metals are going to resume their journey higher. So it's just my personal opinion, but I view any corrections in this market environment as just buying opportunities, and I've been dollar cost averaging all the way. I mean, all you gotta do is you can go in the short section of this channel and you can see the unboxing videos. And I mean, you know, I'm a slow and steady stacker. I like to dollar cost average, and dips like today's I view as a good entry point. But let me know what you think in the comments down below. What do you expect to see tomorrow from the inflation data? Love to hear what you think, so drop a comment. Don't forget to like, comment, and subscribe, and I will catch you next time. Thanks for watching, everybody. Smart Silver Stacker out.